In Friday, July 22nd, I'm going to touch here on S&Ps. It's a little bit mixed here as far as the trend for the near term and then intermediate term. So, we nibbled a little bit here yesterday. I'm not crazy about getting long here. We're just so late in the move. I mean, this is the 18th day. Let me show you guys this on the daily. This is the 18th day that the market has made higher lows relative to the prior day's low. So here on Brexit, we were making lower lows, right? This was a higher low, higher low, higher low, broke to a new daily lower low. This was a lower low. And then even though this day was bearish, finished below the open, we made higher lows relative to, it's really a double bottom, close enough to be a double bottom. But the close of this candle is it's higher than the previous day's close. So what you can do here, this is called a swing line, but each higher low on the daily level, you fail to close lower than the prior day's low. So it sounds a little confusing with the way I just explained it, but it's just simple. Just track a line following each day, and the previous day you just fail to close below it, the prior day's low. So that's 18 days in a row that the market has not, it really hasn't even breached the low, let alone closed below the prior day's low. So we're due to roll over here. Not to say that we can't push it to 2200. That's, anything's always possible. It's just, is it probable? No. So if you're buying them up here, good luck. I mean, you're chasing, and it's just terrible odds. You're overbought. You don't buy things that do this for 18 days. So I'm not crazy about being long here. We bought a little bit just for a day trade yesterday. I said you could hold it into the overnight session. I didn't offer anything above just because I'm the amount of puts that I'm long below here dwarfs the few contracts that we bought yesterday. But the point being is that we get a daily close below the prior day's low, I'm going to be short. I'm going to short more, and the stop's going to be above either today's. If it's today, if it's Monday, your risk is going to be, when I say risk, where are you wrong, where's your risk, and your stop. Those are all the same thing. My risk is above that day's candle, wherever we get the sell set up, or the prior day's highs. It depends on the distance, depends on what the candle looks like. If we were to collapse 20 handles, I don't really want to put my stop all the way up above 2170. I would probably go halfway up the candle type of thing. So there's other rules we use in the model as far as where and how to place your stop. But that's the point. This thing's due to roll over. That's kind of what I'm looking for. I think it can fall back to these highs around 2120. I would love for a move back to the lower bands here around 2080. And there's a lot of hot air underneath the market. The volume's been terrible, so don't rule that type of move out. I mean, the VIX is very low. I'm going to do a video on that later today. So I think you guys get the point there. The 15-minute, you can see it's kind of sideways. The 200 is sideways. It goes right across the middle of the chart here. Same thing with pi. So this trend was down, you can see from the wave structure, but now it's started to flip. So this is kind of neutral trading. You got a lower high here relative to yesterday's lower highs also that you can see more on the 30-minute. So this is just kind of trapping price. So I scratched on these lots. If you're still long a few from yesterday, hopefully you offered them out. Just trying to look for four or five ticks there. But I think now, if you're still long, don't really let this thing get back below pi. I wouldn't let it go below 2158. And then just play this cycle here. So this 15-minute, You can watch the cycle here. It's kind of, see, you can see the same thing. It's just cycling quietly in the middle of the two, which shows you that's indicative of a range trade. We're going to open up here in 8 minutes, so I think I would just use, if you're still long, use this 2158, 2159 area, which is the 200. See if this can scoop and hold. And maybe you can get another move, another cycle back up, and then you want to be selling at any kind of pop here off the open. And then again, I wouldn't let it go below 2158, 2157, because again, right, we're a little bit, we're expecting a deeper pullback. So the hourly or the intermediate term charts haven't rolled over yet, but if we take out yesterday's low, expect this move to pie then around 121.33. All right, that's pretty much has it there. If you guys are new, join us in our live trading chat room. The website, my company's Jenkins Risk Management. JenkinsRM.com is a website. JenkinsRM.com. Twitter handles the Jason Jenkins. You can join us in the room for free, and then from there you can learn about the other services we offer. We have an active trader membership. That's for the guys that are swinging. We're trading around futures, the long bond, S&Ps, day trade, and intermediate term basis. And then you can also learn about the investor services for those that are holding longer term positions, both institutional guys or if you're just the average investor, you have a portfolio. I do some work there also. So visit the site, join us in the chat room. Look forward to seeing you there.